Hello everyone. Welcome to yet another weekly analysis. A couple of things happened, this past week, and I need to address some things. It is very important for you to understand that market structure is what moves the market. Market structure is how we traders, technical analysts, that is how we read the market. That's what I'm saying to you. We do not come on here to use, indicators or tools to determine whether the market is trending or not. All you need to do is understand market structure. Now it's as simple as ABC, right? Now this is market structure, right? Higher highs, higher low, higher highs, higher low, higher highs, higher low, right? This signifies what a bullish market. Lower lows, lower highs, lower lows, lower highs, lower lows. This signifies what a bearish market. This is all that there is to know about market structure. This is how you are able to read the market. This is how you're able to decipher the market. Where is it headed based on the movement it's giving? You see what I'm saying to you? Now, it is as simple as ABC. Market structure, is I don't want to say it's perfect, but it is precise right now. Whenever you see a shift of structure, most especially on the higher time frame, it is very, very, very likely to hold. So higher highs, higher low. You see a sheet of structure like so, right? And then the market comes to retest the left shoulder like so, and then it drops. This is a perfect shift of structure, just like so, right? Now, if you notice, if you notice here, you would know that this is a head and shoulder, right? Meaning the market will also give us a reversal pattern. That's what I'm saying to you. So even when the market, if you want to, if the market is trying to shift its trend to do like so higher high, low higher highs, right? And then it will come down and then create equal highs and then break the neckline. That's what I'm saying to you. And then we'll look for an entry at the retest of the neckline and then we'll sell to the downside. This is how the market shifts. This is how the market shifts. Now I am saying this right now because I'm explaining this right now because it is going to be detrimental in the course of this video, right? Now it is very important to understand that your feelings should not be attached. The market does not do what you want it to do. The market does what it wants to do, and then we react and adapt. Right now, if you've been following us, you will notice that we've been giving analysis just on USD and DXY because on here we try to mitigate our risk. We try to reduce our risk, thereby reducing the amount of times we enter execute in the market. You see what I'm saying to you? In a whole month, yeah, we might be able to execute maybe 3 to 4 times, maybe even once, and we are fine with that because even the one time we've been able to execute in a whole month, it is going to be at least 2%. You see what I'm saying to you? It's going to be at least what 2%, and that's fine, right? In that way, I have been able to reduce my activity in the market. Some say I cherry pick. Now we've been trading Euro USD since like I think September, and it has been going well. Been trading euros since September. Or September I executed twice. October, November, sorry, I executed once, and I made what almost 3%, and that's fine. You see what I'm saying? So the truth of the matter is this, right? Let's go to the top down. Let's go to the highest time frame, the monthly time frame. The truth of the matter is this, right? Like you cannot stop. Do not deceive yourself. I beg you, do not deceive yourself. Say it like it is. It is very important for you to say it like it. Do not try to fit it in. Do not try to squeeze it in. Say it like it is. You know what? Let me go to a clean chart, so you see what I'm saying, right? Now this is the DXY. This is the dollar index, right? It is basically the real USD inverse turned upside down. Now, like I said before, market structure, says that for us to be able to shift our structure, we have to break the last low, like so. We have to break the last swing low, like so, right? So, if you look at this monthly time frame right now, you will notice that we have not broken the low at all. You know what I'm saying to you? Meaning we are still very much bullish. That is the most important thing. You need to have a direction. If you come to the market and the first thing you're trying to do look for fair value gaps and other blocks, you're on the path to failure. But if you come to the market and the first thing you look for is the trend, is the direction of the overall market. I'm not saying for the day, I'm not saying for the week, I mean for the overall market. Where is the market headed? Where has it been headed since the past 2 years, since the past 3 years? Where has it been headed? Let's trade in that direction. And that's how we stay ahead of the market. That's how we do not get manipulated by the news. That is how we're able to trade less, because we are looking for a particular thing, a particular trend. We're not looking to buy if it crosses here or sell if it crosses here. No, we're looking to what? Buy or sell, not buy and sell. Right? So on the DXY, we are bullish. This is very important. I need you to understand. It is very important. If the moment you start trying to lie to yourself, that is the moment you start to fail. The moment you start to try to make it look like it is something is not. That is the moment you start to lose. So the DXY is bullish. It's as simple as ABC. Structure, higher high. It is creating higher lows. We have not broken the structure. Fine. Now that I know that the DXY is bullish, I take that information, I put it in my pocket, and I go to the weekly time frame. On the weekly time frame, I do not even need to know, I do not use the weekly, I do not come to the weekly time frame to say, okay, what is it bullish or bearish? Right? Then go to the daily time frame. Is it bullish or bearish? Then majority, then I'll trade that. That's what people do, right? Majority decision, and then you trade wherever the market is headed, wherever it favors. See, listen, whatever toot your horn, you could do that. Yeah, but the thing is, we have mentors who have gone through the processes that we are trying to go through. That is why we are able to cut through those unnecessary mistakes. Even though you may also have to make mistakes for yourself, so you can understand yourself. That is why we make mistakes. That is why we take losses, so we can understand ourselves, right? But moving forward, right now, the monthly time frame is bullish on the DXY. On the weekly time frame, we were bearish, meaning we were what in a short term reversal. On the monthly time frame, that little pullback you're seeing on the monthly time frame that makes it look like it's bearish. That's a what? That's a mid term reversal. That's a pullback. That's a little pullback, right? Now on the weekly time frame, it was clear as day that we had broken the market structure on the weekly time frame, and that was good. Yeah. Now on daily time frame, that's what I need to understand, right? On the daily time frame, we come here to trade we come here to trade in that direction from the daily time frame. So the weekly time frame can be bullish or bearish. The monthly time frame is bullish, and then I'll go to the daily time frame, look for buys, right? Buy opportunities, anticipating that the weekly time frame will then reverse and turn to also a bullish structure. Now the DXY is bullish, right? But something is happening. Something detrimental is happening. Now the DXY is bullish still, but we know that yes, we were bearish on the weekly time frame for a while, and then we had a chart pattern reversal, like so. We broke the neckline, and then we haven't pushed it upside, meaning we are bullish on the monthly time frame, and we're also bullish on the weekly time frame. From I think from September, we are bullish on the monthly time frame and in the weekly time frame. But now we are having another double top, just like so. And whenever you see a double top or a double bottom on the weekly time frame, it is very, very strong. It is stronger than the daily time frame. Whenever you see chart pattern like so on the higher time frame, it is very, very strong. It is going to cause a reversal in the market more than likely. So you have to take that into account. Now we are seeing what a shift of structure, not just a double top, rather a shift of structure as well. We've broken the neckline, and then on the daily time frame we are now bearish. But we cannot trade this market because we are not looking to sell in this market. We're looking to buy because we are trading in the direction of the overall time frame, which is the what monthly time frame. So for now, Euro USD, the DXY, I am done. My hands are off because why? The markets are refusing to trend. It's not trending the way it's supposed to anymore. My hands are what off. I'm waiting, right? I need to see a shift of structure on the daily time frame, on the DXY, right, on the daily time frame to be bullish before I start looking for sales on the Euro USD. Listen. You may not understand, or it may not resonate with you. Why saying things are like the way they are, but these things that I do, or these things that people do as traders, they come from a place of losses. They come from a place of pain. That's what I'm saying to you. So me, me having this rule where I need the DXY to start trending before I start looking for execution or trading entries on the Euro USD. It is coming from a place of losses. I'm coming from a place of lessons and mistakes. So I do not care. Listen, The markets will always be there. It will be there tomorrow, it will be there next tomorrow, possibly until the Lord comes. It will be there. There will always be a trade. I know how it feels when you're aching to be a part of the move in the market. But it is best you sit on your hands. Trust me, even your capital at break even, it is still profit. It is still what profit. So sit on your hands. Wait, let the market breathe. Let them do what they want to do. And again, you start to ride the word trend. This is trading. It is not medicine. It is not engineering. This is a different scheme of work. Like this is something different, right? It demands patience. It demands discipline. It demands following your plan. It demands sitting on your hands. Don't If you don't see anything, don't do nothing. It's as simple as that. You see nothing, you don't do nothing, right? Now, you may be wondering, what pair are we going to trade? We are obviously going to be trading, right? We're not just going to sit on our hands, but we're obviously going to be trading. And we do not just trade any pair, right? We trade dollar pairs, and I trade. I have like about one, two, three, four. I have four pairs I focus on: GBP, Euro USD, USDJPY, and USD card. These are the pairs I've been trading with since I started trading. So I've been trying to master them along the course of my career. So the Euro USD, right? This is what's even happening on the Euro USD. The Euro USD on the weekly time frame, it is giving a reversal pattern. This you cannot pay a blind eye to it. It is giving a reversal pattern, right? You forget about all these areas of interest. They do not determine if the market is bullish or bearish. Market structure determines if the market is what bullish or bearish. So the Euro USD has given a reversal pattern, a double bottom, and a break of the neckline. Now, the only way I would be looking to sell Euro USD again is when, because it is still bearish on the daily time frame because it has not broken the swing high. Now, the only way I'll be looking to sell Euro USD is when the DXY turns bullish again on the weekly time frame. When all of those reversal patterns turn around, that is when you should start looking for sales on Euro USD and sales on GBP USD and whatnot. But there is also a high probability that the trend is about to shift. You have to take this into account. The markets do what they want to do. You follow, you react and adapt, right? So there's also a clear possibility that we might be having a trend shift. You know what I'm saying to you? So for me, I'm going off of the DXY. I'm not trading Euro USD or GBP USD. I have a pair to trade, which is the USDJPY. Now, the USDJPY top-down analysis is as simple as ABC, top-down analysis, right? Now, we need to understand where the market is headed. The first rule is to understand where the market is headed. If you do not have a direction, how will you know where you are going, right? Higher high, higher low. Let me show you, right? Now, this is a higher high, this is a higher low, this is a higher high. And we came in here to put in a lower low, sorry, higher low. Until we break this high right here, and to create a new high above this last high right here, right? This is the structure point. And you can see how I said in the beginning, right, beginning of the video, a couple of seconds, I said market structure is precise. You can see how we rejected the demand level, we refuse to body close underneath, and we are bouncing off of it. This is on the monthly time frame. It is very important to know this. Now, USJPY is bullish. I do not care whether you're scalping or you're USDJPY is bullish. I take that, I put it in my pockets, right? And I go down to the weekly time frame. What do I need? I need to see something. I need to see chart patterns. I need to see areas where I can plot my buy lines, my prices, right? And then if you can see, we have one by this higher high rather, and then this is also a round psychological 154.500. Now this will be our area of interest to buy from. Now on the daily time frame, it is also in confluence with the daily time frame, right? Because I need to understand this. It is also in confluence with the daily time frame because we rejected the demand. You can see higher high, higher low, higher high, higher low, higher high, right? We've come and we've rejected this demand level right here, and we're anticipating a push to the upside. Now, this is a good sign. Whenever you see a bullish engulfing, like so on the daily time frame, it's a very great sign, right? Now, a bullish engulfing here could be something good to push us to the upside. Now, am I quite shook switch a trend, to switch a pair, I am quite shook. Yes, I've been comfortable with the USD, waiting. I can wait for 2 weeks, and I'll be, when I execute, I strike gold, right? And I'll be fine, right? But right now, we have to, switch our pairs and then ride this trend. That's the thing. It's very important for you to know this. I will be riding USDJPY all the way to 160, 160. I'll be riding USDJPY all the way to 160. This is where my overall take profit is. I'll wait for a break again, a retest, and I'll buy again. Now, the moment we get here, right, I will stop trading USG and I don't go back to Euro USD if it is trending in that time. And that's the plan, and that's how it's gonna be, right? It's very important. I think and we'll end here, and this will be all for this week, right? So, let's keep on following our trading plan. It's very important to follow your trading plan. Trading plan makes the money. Trust me, your trading plan is what makes you money. Your trading plan is your strategy. That is your strategy. That is what you are. Your trading plan is who you are. You know what I'm saying to you? Your trading plan is fitted to how you feel, how you think. Are you patient? Are you impatient? Your trading plan is fitted to you. You know what I'm saying to you? So, if you're waiting for, like, for example, myself, I'm waiting for a break of structure and a break of pattern trend line, right? I have journaled my thoughts. I have journaled my execution and my exits. I am waiting for what? A break, like so. A break of pattern trend line is what I'm waiting for. A close above, and then I might set a limit at the neckline, and then we push to the upside. I'm looking at a 3-1. If it does give me what I want it to give me, or I take a 2-1 and I go and I take the money and I go to bed, right? Simple as that. Now it is very important to understand chart patterns. Chart patterns. It is very important to understand chart patterns. I need you to study them personally, because these things will help your trading. They will boost your trading. Double bottoms, equal lows. They are called equal lows, right? They are equal lows, right? The double top. Some people don't understand what a double bottom may look like, because the market, it's quite deceiving sometimes. But you have to train your eyes, right? These are reversal patterns. You see what I'm saying to you? These are what reversal patterns, just like so. And then the head and shoulder, right? This is one of my most favorite, because I can sell off of the left shoulder by the time the structure is broken. This is one of my favorite, reversal patterns, the head and shoulder. So whenever a structure is broken, like so, with structure, I would wait for a retest of the left shoulder and then sell. Not here. Most people do this, right? Take all of these things up. Most people, execute the market and then they get stopped at, like so, right? This is how you execute a shift of structure, right? Higher high, higher lows, higher high, higher lows. Forgive the lagging. Higher highs, right? And then whenever you see a shift like so, boom, higher high, and then it comes to create a lower low, like so. We've body closed below, not weak closed, body closed. We do not say, okay, a retest of this place and then a drop. No, 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 no. We say a retest of this place right here, the left shoulder, the retest of the left shoulder, and then a drop. And then you can then use the neckline for another entry again. See how beautiful this is, right? Now, if I was, this is how I execute head and shoulders, right? I will sell off of this level, and then I will take profit at 100%, which will be right here, and then I will sell again at the neckline, which is right here. You see what I'm saying? So I like using head and shoulders. My favorite. It's my favorite because in just one move I can have two entries, and I make as more I make as much percentage as I want. So percentile as I want. So that'll be all for this week. Nothing is not there's nothing special. It's nothing special. The same thing I repeat every week. Break of trend line, break of structure, bullish, bullish engulfings and whatnot. Go to the monthly time frame to see where it's headed. The monthly time frame is overall simple as ABC, right? It's as simple as ABC, because it's simple to me because I'm mastering it. I haven't mastered it, but I'm mastering it, right? So that'll be all for this week. Have a good weekend. Ciao, ciao.